Let's get to the big story breakdown. The first full week of trade in 2026 marks a return to normal for economic data after last year's government shutdown. The focus is squarely on jobs this week. Friday's December employment report is expected to show hiring slowed at year-end. Investors will also watch ADP private payrolls as well as job cuts data from Challenger, Gray and Christmas and weekly jobless claims. And all of this does feed into expectations for the Fed this year. Investors also waiting for any signal for Trump on his pick to succeed Fed Chair Jay Powell. Well, joining me to weigh in as we kick off the trading week and the year is Michael Reinking, Senior Market Strategist at the New York Stock Exchange. Michael, Happy New Year and good morning.
Morning, Happy New Year. Thanks for having me back.
Well, 2026 is off to quite a start, isn't it? We saw a record high for the Dow in the previous session. So tell us about the momentum that you're seeing.
Yeah, so I mean, we've continued to see kind of some of the momentum kind of coming out of 2025, right? And we had run a study looking at the 3-year trailing returns, right? And there's only been 4 years in history that have exceeded the almost 80% returns we've seen in the previous 3 years. That was 2021 and then 1997 to 1999. Now, if you look at the return profiles on the 1 and 3 year basis on the after those strong gains, the 1 year returns are a little bit mixed. Averaging around, if you look at all years that have exceeded 50%, averaging around 5% or so in the 1 year return profile, but the 3 year return profile has been, kind of very, very strong.
And as we head into 2026, we know that there are a lot of bullish calls for the S&P 500 as we start off. But of course, first and foremost, it is a big week for economic data, and we do get the return to the employment report coming out on Friday, the first Friday of the month. So what are your expectations, and how important is this for the Fed outlook?
Yeah, so I mean, I think it is kind of clearly the most important piece of economic data I think we have, at least in the next couple of weeks. And there's an expectation that you'll see kind of a little bit of a pickup in hiring, kind of from the last report, right, which was all pretty sloppy, right? Yeah. So we're kind of getting back to this normalization to kind of renormalizing some of that economic data, right? This is going to be, it'll be an important factor in kind of Fed, the path of policy for the Federal Reserve going forward, right? I think it would take like a really, really negative number to get the Federal Reserve to move in the January timeframe. I think more realistic expectations are for potentially kind of the next rate cut, kind of towards the end of Q1, March, April timeframe. But it is important, just to see kind of how the economy is progressing.
Yeah, and when we look at the expectations for a rate cut for the January meeting, we stand at 16%, and expectations for no change currently hovering around the 84% level. But of course, our focus has been on CES taking place in Las Vegas as well, especially on the heels of the CEOs of AMD, NVIDIA, as well as Intel. But there have been a lot of announcements. So what's the key takeaway so far?
Yeah, I mean, look, semiconductors, after being up almost, kind of the ICE semiconductor index was up about 40% last year, started the year up, and it was already up over 5%, kind of year to date in, kind of just 2 trading sessions, right? So, that sector has been, kind of very much in focus. As you mentioned, we had, kind of 2 of the biggest heavyweights, kind of speaking last night. And look, I mean, a lot of the conversation at CES seems to be, it all revolves around AI, but it's kind of more pushing towards autonomous robotics, right? Kind of this idea of physical AI, right? So that kind of is kind of has been a lot of the focus. Also last night, though, pretty important, interesting and important in terms of kind of the semiconductor index, microchip, which is more of not necessarily demand related, but the company raised their guidance for the second time in the last couple of weeks, right? Suggesting that there is kind of more strong demand in other more industrial areas of the market. So that's a pretty positive sign.
Well, this is definitely an area to keep in mind as we head into the rest of the week and watch out for other announcements from CES. So, Michael, before I let you go, we're just starting off 2026 and a lot on the macro front. We have to keep in mind that it's also midterm election year, and of course we're monitoring geopolitics. So what is your base case as well as your bear and bull case for 2026?
Yeah, look, I mean, I think the setup going into 2026 is pretty positive, right? You have kind of expectations for earnings growth in mid double digits, right? There's an expectation that some of the policies put in place by the administration during 2025 will start to have an impact on the economy and help, kind of cause some reacceleration. Some of the tax cuts, some of the, kind of the tax policy around, investment within the country. So I think, like, generally speaking, you have a pretty positive backdrop. You also have the Federal Reserve, kind of easing, and then some of the balance sheet movement that they've been doing as well. Kind of putting some more liquidity back into the system. Look, I think you're set up for kind of another positive year, right? That would be kind of my base case, probably kind of around the 10% kind of return profile, especially with kind of double-digit earnings growth expectations. I think when you look at kind of the seasonals, as you point out, kind of midterm election years tend to be the worst in the 4-year presidential cycle, right? So that adds a little bit of a layer of concern where the average return in a midterm election year over the last 50 or so years has been about 1%, and we're only up a little over half of the amount of time. The negative case, would be that you have all of this positivity, right? And kind of positioning is starting to kind of get to a little bit more of a stretched level, right? So, you could see some more volatility, but keep in mind, the best 3-quarter performance comes right after midterm elections. So that Q4 theoretically could be the start of kind of another kind of very strong period for the market.
Well, Michael, always great talking to you. And of course, as we kick off the new year, a lot to consider. So thank you so much for joining me, and thank you for all of your insights.
Thanks for having me.
Thank you.